So
yeah, so first of all, as you all know, we conduct this series of webinars on very important topics with related to advanced analytical areas of finance and algorithmic trading, uh, risk management, financial engineering, quantitative finance, machine learning, and all other important areas of finance, right? So today's uh, webinar will be, or the session will be a masterclass on algorithmic trading, where we will, mention about the different aspects of algorithmic trading and how one should go about it, right? And to present today's session, we have Yatish Borole. So Yatish has done his engineering in computer science, and he's a certified quant analyst with more than 10 years of trading experience in Indian markets, particularly on the algo trading side. So he currently works as a senior product manager in the broking domain, and he has expertise in building automated trend following, mean reversion, and option selling systems. So he will take you through in today's session regarding all this algo trading aspects, right? And before I hand over the session to Yatish, just allow me a minute to mention about how we would go about in today's session, right? So as you all know, today's session has been scheduled for about 1.5 hours. However, said that we may take additional 10 minutes or 15 minutes time. So normally we allocate about an hour for this topic of discussion, but in today's session, we have a lot of practical aspects and modeling that we will be covering. So we might take 10-15 minutes additional, right? So post Yatish's session, then we would go into the Q&A. So now or later on during the session, whenever you have any questions, queries, or anything that you would like to discuss, please feel free to type in the questions section in the chat window, right? So and we would be happy to take up all your questions during the Q&A after the session, right? And in between, of course, we would explain, how to go about learning algorithmic trading and how IIQF can help also, maybe in a brief chat. And then we will have the Q&A, right? So that's the general flow. And since the participation is quite big, so unfortunately, we would not be able to allow you the participants the speaking right, but nonetheless we want the session to be interactive. So please feel free to interact on the chat window, post your questions, queries, and anything in particular you want to discuss in context of today's session. So with that, I'll hand over the session to Yatish. I'm making you the presenter, Yatish. And first of all, a very warm welcome and thank you so much for joining in, taking your time out. And let's start the session. I'm just making you the presenter.
hello, the screen is visible.
Yes, your screen is visible and you are audible as well, loud and clear. Whenever you are ready, please
Okay,
feel free to start the session.
sure. So let me minimize this. Okay, first of all, thanks for giving this opportunity to me for conducting this session of algo trading. So I will quickly make you go to the index for what different aspects we are going to look at in this webinar. So very first is the trader's death spiral, like how a trader get stuck into a particular cycle while trading in his overall trading journey, the psychological blocks that he faces, how the trading psychology should be, and then post this we will be, looking at some brokers API for automation for algo trading. We will be going through high level trading system flow, how one can automate his current trading system, and then develop a powerful trading systems. So post this, we will be looking at the essential metrics for trading strategy evaluation. This we'll be doing with a live trading systems, downloading the P&L report from back office of one of the Indian broker, and later on the Indian brokers API for automation. So this session will consist of 30% of like the trading psychology, 30% of uh, developing a trading system, and rest it will be a practical session. So coming to our first slide. So basically, what is basically a trader's debt spiral? So to brief you about this, I have listed few of the points over here. For an example, what happens is, uh, as an individual trader, uh, he looks at a new strategy. He like it is from some internet-based source, from books, and then he trades that strategy. He finds a new strategy on the internet, which he finds promising, and start trading it day in day out, and then he gets some initial success. This is where the actual problem starts beginning. So after initial success and belief that the strategy is working, and this make the trader believe that he will be a profitable trader now. But uh, after facing few of the losing streak, sooner or later the trader will have a couple of losing trades, making him question whether the strategy which he has selected really makes money. Is it really profitable or a loss making? Then after trading a particular strategy for few days, few months, uh, and facing few of the losing streaks, the trader again thinks that whether the strategy is like working or I need to change the strategy. Then coming to the fourth step, the trader changes the rule of the strategy, trying desperately to avoid these losers. But just to tell you, uh, trading system consists of losing trades as well as winning trades, and there are definitely some amount of capital that gets wiped out from either the profits or from the initial capital, which is called a drawdown phase. We will be discovering drawdown phase in detail later on once we practically test the strategy in Python. So the next one is and continued trading. So now what happens is, once the trader changes the strategy, he keeps on continuing continue trading with different strategies. He doesn't stick to a system, expecting better results from newer strategy. But we are going to clear this myth, like sticking to a system is very important, and changing system is like a flaw which every trader does. Now again, sooner or later the trader encounters some losing trades again with that particular strategy, and he lost confidence on the strategy. So this is a cycle basically which keeps on going when someone trades discretionary, like we say it manual trading, when someone observes the chart, when someone puts some fancy 2 3 indicators and tries to make a system. These are the issues, these are the probably these are the, we can say, wrong methodology which trader follows while trading discretionary. So in today's webinar we are going to exactly see how we can overcome this issue and create a powerful trading system which we can run for day in day out for longer run. So coming to the psychological blocks, which basically plays a major role. So as soon as the trader or a guy starts trading, either some of the traders trades for fun. Like nowadays, I have seen people who trades for fun. Like I feel good, so I trade every day, irrespective of my setup matching, irrespective I am getting signal on my setup or not. Some they just trade to make money aggressively, which is which is a wrong way of trading. Secondly, some of the people, while changing the systems, from hopping the system from one system to second system, they do revenge trading. Like even if they don't have the setup, they don't have the correct signals on the system, they keep on trading like in a wrong way, what we call as revenge trading, which is again a wrong approach. Then some of the people, some of the trader, they see trading success as a part-time trader, where they think that they will be working along with that, they will be trading in between whenever they will be getting the time and the setup, which is again it cannot be called as a systematic trading. And finally, some of the traders who are successful at backtesting their strategies manually, but they eliminate the non-efficient days, and then they in live, and when they trade go live, then these non-efficient days they face issue facing those losing trades, and then the system gets hopped every time a losing trade or non-efficient days occur. So these are basically psychological blocks which each and every trader has to face in his trading journey. But we will learn today how to avoid these psychological blocks and convert the overall discretionary manual trading into a systematic trading, which will help us to manage uh, capital. So next is trading psychology. So this is the overall psychological flow which I have created, which most of the traders would be able to relate with this. Like the very first thing which comes into play while trading is once we are profitable for 4, 5, 6 days, then there is something called ego comes in between while trading, which is very much natural, which I called as winning trades euphoria. This is basically when a trader sticks to a system for a shorter period and he has some 5, 6, 7 winning trades, then he has that like psychology that I will be able to make X percentage of returns every month consistently, doing like following the system which is following currently. But this is a euphoria because every system has to go through a drawdown phase, a couple of losing streak trades, and it is natural. Every system has a combination of winning and losing trades. Henceforth, even if the system is working today, in like consecutive days of winning trades, like we should be able to judge the system whether we are properly following it or it's just a luck factor or euphoria. Now, once the system is like once the trader faces few losing streaks, then he he starts self-blaming and negative self-talk that I would have avoided this trade today because the markets were not uh, good today. So these are all the self-blaming what a trader does to himself because he is not following a systematic approach. And then after looking at some motivational videos of trading, he again gets into overconfidence that I will definitely cover my losses and I will be coming up with some profitable system now. Then he starts over trading, irrespective of the trading setup matches. He over trades, and slowly, even if his luck works out, then he hates the idea of growing the account incrementally. For an example, in the long run, with a smaller percentage of return, if someone is able to compound his capital, uh, like if someone like in this phase the trader won't be able to agree with this idea, like growing the account incrementally, compounding account. These are all issues with the trader face. And then finally, spelling out profit goals for each week, like for every week I will be gaining this percentage of uh, profits. The traders thinks in a way that for now, every month I will be getting this percentage of profits. And then again, after facing couple of losses, he's like not sticking to a system for a longer run. And henceforth, losing trades and depression keeps on going and finally blowing accounts number of times. This is the overall trading psychology, according to me, which a retail trader or a trader faces in his trading journey. And it is very common. It is a part of successful journey, which everyone faces this. Now coming to the systematic trading. Now, why one should move to systematic trading. So systematic trading employs a set of predefined rules and algorithm to make decisions based on a variety of factors such as technical indicators, market condition, economic data, and statistical analysis. So what are technical indicators? Basically, the technical indicators are derived from prices, OHLC, which can be used for signal generation mechanism through some predefined set of rules. For an example, if I have an indicator called moving average is nothing but basically the average of the price. For example, I want to take the moving average of last 10 days, and I'll be calculating the average price of last 10 days, and I will be doing like a signal generation mechanism where I will be able to buy and sell. So considering a single set of rules, backtesting the system for a longer period of time will help us to develop a systematic trading system. So the key advantage of systematic trading is it has ability to eliminate emotions from trading decisions of predefined rules. Trader can reduce the impact of the emotions. This everything is associated with the previous slides which we looked into, like the cycle, the trading psychology, the debt spiral. All of these things can be easily avoided by systematic trading, that is through predefined rules of trading. And obvious, the emotions which leads to irrational decisions and poor trading performance can be improved by following a system for longer. So one of the most popular approach to systematic trading is trend following. So there are a lot of approaches in markets. Like some of the people they do trend following, some of the people they do option selling, some of them do mean revision. So today in this session we will be going through a beautiful trend following systems, which will be back tested in Python, and we will be coming up with the trading statistics, which we will look into. So basically, trend following aims to capture a significant portion of market trend, either an uptrend or downtrend, by entering a trade when trend is established. So if I give you a brief, let me show you it in a paint. So basically, trend following is something where the trend is ongoing and you attempt to enter into a trend after the signal confirmation. Like after the signal confirmation, if we have the signal over here, after the signal confirmation we enter into the trace, and then after the exit signal we exit. So ideally in trend following, a trader has to kind of give up 5% of the initial trend and exit once the 5% of the final trend is reversed. So this is how trend following works, and we are going to look at the trend following algorithm today, which will be developed using couple of indicators, trend following indicators, later on. So this is the type of trading which we'll be looking at today. So in order to develop a systematic trading system, we have to choose a programming language. It can be any language. It can be Python. It can be C++. So today in this session, I will be choosing Python language to develop my systematic trading system. Now going to the trading flow, which will be required while building the system. So the overall flow is basically there will be a user login, how you log in into your broker's app. Then there should be a trading development kit, a strategy development kit. So this strategy development kit will consist of multiple strategy or a single strategy. A trading system can be a combination of multiple non-correlated strategy or a directional, non-directional strategy. So a strategy development kit consists of both non-directional, directional, or mean revision system. And in order to make this strategy live, we need a WebSocket data and probably a historical data. So if the algorithm is an intraday algorithm, then intraday algorithm with price action based strategy, then we won't require the historical data. But if we aim to develop a system which consists of indicators, then in order to get the backdated data and live data for indicator calculation, we require the combination of historical data as well as the live data. So very first, what we will be doing is we will be getting the WebSocket data from the broker's API. We will be resampling the WebSocket data to the desired time frame and merging it with the live data. Henceforth, passing that merged data, resampled data into the indicator calculation. This is the purpose of WebSocket data and historical data. Now suppose we have around three strategies which need to be two strategies which need to be added into the strategy module. So this strategy can consist of multiple legs. For example, I am planning to execute a trend following option buying model. I am trying to execute a straddle, a strangle, and iron condor all together. I have a system which consists of trend following, option selling, and for an example, mean revision. So uh, this will be added in the strategy development module, where all of these strategies will be developed and tested. Uh, Along with the strategy development model, we will be having a position sizing model, which will consist of uh, what position sizing we need to maintain in all of this strategy. So definitely these different strategies will have different winning accuracy, different drawdown, different overall trading statistics. So looking at the trading statistics, we will be allocating a position sizing to all of these strategies, and henceforth we'll be developing a complete system. So we have the we also will be having an order execution model. The order execution model will consist of all activity which a trader does manually. For an example, a trader places an order, a trader modifies an order, a trader cancels an order. This all activity will be automated using broker's API, and parallelly we will be also logging our logs, overall logs, because uh, algo trading is basically something which we need to, it's a dynamic thing which we need to every time evolve with the market conditions, not change the system but evolve the system along with the market conditions. For that, in that case, we need logs, where we will be storing the logs. We'll be looking at the overall statistics, whether my system is exactly behaving according to the backtest. Like it should almost match 70% with the backtest. Now coming after the order execution model, we will be having a order tag management model. which will help us to exact the order tags will basically consist of the strategy tags, which will exactly help us to uh, fetch the desired PNL of particular strategy with the tag mechanism. So we will be fetching the orders through order tag for calculating the strategy PNL. In live also, we need to have a different like a different process where all of the strategy PNL will be calculated individually to look at the statistics later on. Then we have a risk management model. So basically, what is the risk management model? Uh, I have named this as a risk management model because whatever scenarios that we can encounter in live markets, for example, the order can fail because of uh, different reasons, like the brokers, we didn't get the response of the API from broker, or we need to retry it. The another one is what percentage of fund we need to allocate to different strategy. Then comes the order management model where all the orders will be logged. So what different required, like what are the different brokers API that will be required for automation of our system? The first one is WebSocket data and historical data, which we already discussed, which will consist of get LTP data API and get candle data API. Now, what is get LTP? LTP is basically the last traded price which we has to fetch to compare our strategy condition every second. Okay. The second is get candle data. What is candle data? Candle data is basically a data which we'll be requiring to calculate our indicator value. I will be showing this into Python later on, how candle data help us to calculate indicators calculation. Then we have the execution model. The execution model will basically consist of three main APIs, that is place order API, modify order, and cancel order. So whenever a signal matches into our trading systems, we aim at executing that signal at like a particular speed, for which we will be using the place order API of broker. Then if in case if we have a trailing stop loss in our system, then to modify the limit orders, we will be using the modify order API. And henceforth, if there is some uh, execution issue at the broker's end for quantity, in order to cancel the existing order, we will be using the cancel order API. The next one is the risk management model, which is get fund API. So why we'll be using the get fund API? For example, if I have strategy A, strategy B, strategy C, and I have around 10 lakhs in my account, and I want to allocate 40%, 20%, 20% into different strategy. So in order to allocate my funds, segregate my funds into different strategy, I will be using the get funds API, which will be later on used for allocation of quantity into different strategy. So this is the purpose of get fund API. Then coming to the order management model, that is order book API and get order status API. So the order book API basically is used for fetching the orders which have been executed to get the status of executed order. For an example, I have got a signal from a trend following system that you need to execute this order. And once I execute this order using my execution model, that is place order API, I will be checking the response of that particular order through fetching order book API. So this is the purpose of order book API. Then the next one is if I have a system which execute lots and lots of orders in a day. For example, I execute hundreds and 200s of order in a day. Then to get the particular order status, I will be using the get order status API, which will be very useful. Instead of filtering the overall response of my order book API, I will be using this API, get order status API. So coming to the final evaluation, like what essential metrics should be considered for strategy evaluation. So the very first metric is the maximum drawdown. Now this is a term which I want you to pay attention very carefully, because a lot of people have misunderstanding regarding the drawdown. So what is drawdown? So suppose you started with X capital over here, and the capital starts growing slowly. Your equity curve basically represents the amount of gain which your account is getting through strategy. So if you started at this point, and your account is growing at some pace, and suddenly at this point your system has some losing streaks, and this is the period where your equity curve faced a down curve. So basically this is a drawdown. Now this is drawdown from peak to trough, that is from your profits you have faced a drawdown, which is natural, because your equity curve will always move in such manner where you will have some drawdown. So historically, we need to know this drawdown, exactly what can be the drawdown of the system. So this is the reason why we backtest our system, so that we can understand if I am facing 4%, 2% drawdown of my, like, the current total capital, then it is obviously a normal phenomena, because we have to go through ups and downs in the equity curve. Suppose we started at this point, and first, like, the drawdown started from the capital itself, and then the capital moved up. Then this is called the equity curve drawdown, underwater equity curve drawdown, where the drawdown started from your capital itself. So there, like, we cannot exactly predict this, like a system given to two traders, if he's able to start this at this point or at this point. So it is completely like unpredictable, like when which system will be started when by which people, which guy. So yeah, this is the drawdown, basically the amount of uh, total capital that can be lost from your capital or from your profit. uh, Now the second one is the total profit. The total profit is basically what total profits for a particular period of time you have like achieved. The next one is the total loss. What amount of losing trades, and what was the sum of the losing trades of your overall system, that is called the total loss. The next one is the winning trade. So if I attempt to execute 1,000 trades, and what amount of trades were my winning trade? For example, if out of 1,000, my 100 trades for winning, like 200 trades for winning trades, and rest 800 trades for losing trades. So it's like the 20% is the winning accuracy. But believe me, we can even make money with 20 to 25% accuracy of a system. A lot of people, they approach me saying that I want a system which has 95% accuracy to make money, but that is not required. With a 20-25% accuracy also we can make money. I will show you how we can make money with just 20% accuracy. Like if you are planning to execute 10 trades and you are only right at 2 trades, you're still making money at the end of the quarter or year. The next one is the winning rate. Winning rate is basically what percentage of time your system is winning, and the average gain and average loss, as it defines what is the average, uh, what is the average profit which you are taking when following a particular system. And the average loss defines like what is the average loss. For an example, if I have a system which I'm running on 1 share, and on an average my average gain was 30,000 and my average loss is 25,000. So I will be having that mindset that at any point of time on 1 share I would be able to look at a average loss of 25,000 and an average gain of 40,000, for an example. So the next one is max consecutive losing trades. So this is very important when we are about to follow a trading system. Historically, we should have an idea what amount of losing trades I am going to face in a particular trading system. For an example, I have developed a system of 30 different strategies, and combining all the strategies, historically it has been like shown that I need to go through 7 to 8 losing streaks. Then while trading such systems, uh, you should have patience that you will be waiting for 8 or 7, whatever backtest are shown, losing streaks, uh, to have that entire backtest match with your life. Entire in the sense 70% backtest match with life. So losing trades is very important in the essential metrics for strategy evaluation. Then comes the winning trades. So no doubt winning trades is important, but uh, uh, yeah, the winning trades will be always like in my case, I don't give much importance, because the major psychology gets changed while we face losing trades. In winning, like while we are winning every day, consecutive 11 days, 12 days, we always feel happy and we follow the system. But while losing trades occur, we plan or we feel to change the system sometimes. So what is drawdown recovery days? So this is also an important factor when it comes to understand what amount of capital will be lost and what number of days will be required to cover this capital. If I am down by 2% of 1 share, that is 2 lakh rupees, then what number of days it is going to take me to like cover my drawdown amount and get into like again have a equity curve new high. So if I try to elaborate this in terms, like let me show you. My equity curve is rising, and suddenly I have this drawdown phase over here. So, and this is the break even, last break even, where I had my equity curve high. So what are the number of days which took to recover my drawdown, this drawdown, and again to make a new equity curve high, basically. This is called drawdown recovery days. Okay, what amount of like what number of days it took me to recover my overall drawdown. Now the final one is profit factor. Now, what is profit factor? Profit factor is basically for what amount, like what amount you're risking, like to get X amount. For example, if I'm risking 1 rupee to make 2 rupee, that is 1:2. If I am planning to execute 10 trades, and on every trade I am risking 1% of the capital, and in return I am getting 2%. So the profit factor will be basically 1:2. Uh, with a 50% accurate system, even if I have a profit factor of 1:2, your strategy should work. Particularly, so we can look at a trading calculator. So this is a trading calculator which will help us to calculate the break-even win rate. For an example, I want to risk 1% of my capital and the reward is around 2%. 2%. And if you calculate, uh, even if you're right 33% of the time, you will be able to make money. So there is like no need to find a system which is 95% accurate. If I'm willing to risk one, my reward is one and my risk is one, then you need a 50% accurate system. And if I do it 0.8, then you need 55% accurate system. So basically, we will be designing a system, a trend following system, which will have a lower accuracy, and still we will be looking at it how it makes money for us. So coming back to a slide, so this is the pretty much which I have the information which I shared with you for a systematic trading. Now we will be looking at the live broker P&L, how we can evaluate whether our trading system is correctly performing in live markets, or there is something which we need to change. Okay, so I'm considering, I will be considering 1 year of my reports, back office reports for FNO, and we'll be downloading the reports and executing our piece of code on this file, so that we will have an idea how our system has performed in the past 11 months. Okay, so we are following a automated system for this account, uh, which we are showing you currently, and we will be downloading these reports and running our piece of code on this to exactly analyze what statistics we have got for this particular period, that is from 22/6/1 to 2023 9/23. So these are all live trades, and these are the reports which we have generated. So this is a system which has been deployed on 10 lakhs of capital, where the charges are basically the technology charges, API charges, and rest is the brokerage. Uh, so let me show you, quickly go to the Python IDE. We will be using Spider for developing or backtesting our trend following system. Now, first we will the practical session will consist of two things. First will be evaluation of strategy metrics on live PNL, which we downloaded just now, and the second will be developing backtesting a system, a trend following system. Okay, so let me quickly open a file for you, new file. Just give me a minute. Hello.
Yes, Yatish.
Yeah. So I'm continuing now. So this is the statistics code which you have with us. I will quickly make you a walkthrough of this particular code, what it is doing for us.
Yeah, can you please share your screen? Your screen is no longer visible.
Okay. So is it visible now?
Yes, yes, it is visible.
Yeah. So I will keep on commenting for all the functions what like exactly what the particular piece of code is doing for us. So over here, what I have did is I have read the PNL values back office report. So pd.read.csv is basically a piece of like a code which is reading the CSV column for us, which we have downloaded. I haven't passed currently. I will just quickly make you go through a code first. We have this calculate drawdown function, uh, which is calculating the drawdown for us. For an example, if you have a column of P&L where there are number of like number of days for which we have traded and we have P&Ls, this will be taking that P&L column as an input and giving us the max drawdown which that particular strategy is faced. For an example, I have started with 10 lakhs and what amount of fund did like we lost at the time of following a system. This function will calculate drawdown for us. The next function is calculate trading statistics. So this particular function will calculate the total profit for us, the total loss for us, the winning trades, the losing trades, as I showed you on the and on that particular slide, exactly uh, what statistics we'll be looking at. Then this particular piece of code will be calculating consecutive losing trades. That is, if I'm following a system and I may face 5, 10 losing streaks, then I want to analyze uh, on that particular back office report what different what are the consecutive losing streaks I followed right in life. Then we have this winning trades. Again, I don't give much importance to winning trades because the psychology gets disturbed by losing trades. But still, we will be calculating this winning trades. Then we have this drawdown recovery days, which I feel is the most important with like in my point of view because the number of days we are in drawdown, there is the more possibility of we changing the system because we again start feeling that this system is not working now. We need to change it. So it should be like we should come up with a number a rough number for which the system is going to be in the drawdown. So we'll be calculating the drawdown recovery days as well. Then we'll be calculating the profit factor. Uh, Profit factor, you can call it a very common term as risk to reward ratio. What you are risking to for a particular reward, profit factor. Then we will be plotting the equity curve of our account, and then finally we will be calculating underwater equity curve drawdown. That is, what is the amount of capital lost from the initial capital loss from the initial amount which we deployed on a particular system. Then I think I have missed one of the function which I will be quickly writing for you. That is the final capital. What is the final capital that we gain? So I will just I'm reading my current CSV which we downloaded from back office so that we will be able to get the statistics. PNL CSV. So we need to pass that column for which we want to perform this calculation part. That is the realized P&L, profit and loss. Coming to the piece of code, we'll be changing this column to realize profit and loss. We'll be converting that particular column into a list, and then we will be calculating this. We'll be passing that particular list of P&L to all of these functions to get exactly what gain we have or what losing streak we have faced. So it is giving me okay. So this is basically commission which I have calculated. 25 rupees per order. I will just remove the commission part. Okay, so let me show you the equity curve first. So this is how the system has performed in life. Yeah. So look at this equity curve. It is moving up. That means the strategy is performing good. But if you minutely look into this, there are some periods when the rod of like the curve is falling down over here, over here, over here, over here, right? So like most of the system equity curve will look like this if it is profitable. There will be some drawdown period, then drawdown recovery, drawdown period. Now let's see what is the maximum drawdown which we have faced from capital. Like as I showed you, uh, uh, what amount of broader like let's do the underwater equity curve now. So this is the underwater equity curve which is showing me around I guess roughly around 70,000, right? uh, Coming to the statistics parts now, the most important part. What is the maximum drawdown that has occurred from profits? It is around 98,000, which is pretty much normal. If you're setting like if you're placing your orders on an amount of around 10 lakh rupees, then 90,000, which comes around 9.8% drawdown, and then the total profit is 24 lakhs, the total loss is 20 lakhs. We will be subtracting both of these numbers to come up with the final P&L. The winning trades were 312, the losing trade were 345. Hence, we have a 47% accuracy of the system, which we have executed. 47%, and still we are making money. So the conclusion is we don't have to run behind 95% or 85% accurate system. The average gain was 7,943. The average loss was 5,816. So these were the terms which I was discussing prior to this, that we should have an idea of what is the average gain and average loss. So if I am hitting a loss of 6,000 rupees any day, or average of 6,000, I should not be worried because that is what something I already know that I can face. In fact, we should be prepared to face loss of two times of what we have seen in historical backtest, like 10,000, 12,000 at the max. So maximum losing trade was 11 and maximum winning trade was 7. So you can see, even if the system was continuously losing the trades, the 11 trades were in a row, and still the system has been followed, and the maximum consecutive winning trades were 7. So uh, so here comes the role of the trading psychology. So I already backtested the system, and you can see, I faced 11 consecutive losing trades, which roughly I had an idea that I have to face around 9 losing streaks. In that case, I faced 11 losing streaks, which is pretty much okay. And the consecutive winning trades were around 10, and I faced around 11. So the drawdown recovery days is 9 days. So what is this 9 days basically? The 9 days is basically the number of days it took me to recover from this fall and create a new equity hive. It took me 9 days, 9 working days. Yeah. So profit factor is 1.23, which comes on 1 is to 1.23, which is pretty much good. So if I take you back to that particular calculator, which we looked into, uh, so my risk is 1 and 1.13 is my profit factor. So it requires 46.95% accuracy, and we have exactly achieved around that particular accuracy, that is 47%, right? So this is a system which is a profitable system which can make money in longer run. So this was all about backtesting, studying the statistics on live PNL. Now I'll be showing you a trend following system, which has like I will just show you. Coming to the trend following system. Okay. So now we will be having a config file. So am I audible? Hello, hello.
Yes, yes, you're audible. We can
Okay,
see your
fine.
screen as well. Yes, please
Okay,
continue.
okay. So coming to the trend following system now, which will be developing a powerful trend following system. So I will first tell you what are the important metrics which we have to consider while developing a trend following system. So following are the metrics which you should consider. The first one is a proper tested entry, exactly when you have to enter into markets. Most of the people, what they do is listen to some third party tips, or they look at some YouTube video where they are showing that currently markets are looking negative, so you need to short, and they randomly take the trades. But in systematic trading, we don't do that. We actually develop a trading system for proper entry, proper exit, proper trailing mechanism, and a proper risk management. So in this case, first we will define a proper entry for our system. So you can see this chart. I have used few couple of indicators to develop a system, and particularly for developing a trend following system, you can use indicators such as moving averages, which are a very good trend following indicators. You can use super trend. You can use moving average envelope. So I have used super trend over here. I have used super trend over here, and don't chain. Don't chain is a very good indicator for following trend, for long trend. Okay. Uh, so in order to define an entry, we have considered super trend buy signal, and in defined to filter our signals, because trend following, the highest accuracy of trend following without considering a multi time frame is lower, but it still makes money. But if you are able to add a higher time frame into a trend following system, then the accuracy is almost get doubles. Like if you are having accuracy of 25% with a single time frame, then with a dual time frame will be able to achieve almost around 47% accuracy. In trend following, it is also a natural phenomenon that you have to give away around 2 3 4% of the initial starting trend, or else you have to give away a initial, like at the end you have to give 2 3% of the like while the markets or the asset is picked out. So in order to explain, you can see over here, this particular period is lost and we have entered over here, right? And in this case, this particular period is lost and we have entered over here. So uh, it doesn't mean that this system won't work because it is giving us signal late. It is a part of trend following system. We have to give away a few percentage while entering and exit. Now what about the trailing mechanism? Now in order to trail, we can use super trend as a trailing mechanism. So let me give you an entry rule first. If the don't chain is calculated basically on the high of the prices, like 50-day high, 20-day high. Like now I have selected 20-day high. Uh, so the overall logic is whenever a price touches to 20-day low and we have a buy signal on super trend, we will buy that signal. And whenever we have when the price touches the upper band and we have a sell signal, we will sell. These are two rules. There are more two rules which are incorporated into system. Uh, these were the two main rules. There are two rules for long, two rules for short. For now, we will be considering all the four rules in our backtest. So this is the overall strategy which we are considering for trend following: buy, trail, and exit, re-enter. So it's the whipsaws. What is whipsaws basically? Let me show you in Paint what is whipsaws. So if we have a trend which is going in, and suddenly the trend started going range bound, then in this case we will have maximum false signal. And once when the trend breakouts, when we have a then we have a final signal which will be running for longer period of time. But in order to avoid this whipsaws in trend following, uh, we have filtered this through don't chain channel, where we will be considering the signal only if the price has touched the upper band or the lower band. For example, over here price touched the lower band and then we have the super trend signal and it went long. So this is how trend following works uh, everywhere, uh, in any markets. And for selling, we will be avoiding the signals which we have in between. So these are the pretty much rule of the system. I will be backtesting this for you. First, I will be making make you go through the piece of code which we have developed for backtesting. So this is the chain code. Okay. Uh, I will quickly make you a brief understanding of this code. So this piece of code is calculating our super trend. Super trend is a trend following indicator for which I have passed the period as 10. Okay. This piece of code is calculating don't chain for us, which is the upper band, the lower band, and the middle band, middle channel. Okay, I am passing values 50. So now why 50? I have passed on the example I have considered 20, but in backtest I have optimized the value. Basically, optimization means you will be passing a set of permutation combination to a particular strategy, which will give you a optimized output. So there is a level at which we should optimize a strategy, and I have performed the optimization, come up with a number that for super 10 it should be 10, and for Donchain it should be 50 for particularly Bank Nifty, which is traded in India. So we have this rule number one: high price touches upper band and close price comes below super 10. We will be doing long, and over here I have read my CS. Over here I have made my PNL CSP header, that is date, entry price, exit price, points, PNL rule. I have matched my condition logics which I discussed on the chart, that if my high is greater than upper band and I have a buy signal, then I will go long, or else I won't go long. Then I have a short signal, high price touches upper band, and then take the first short signal. This is a piece of code which I called it as rule 2. Then we have rule 3: low touches Bollinger low touches below band and close price above super 10 and exit. So pretty much these are the rules which we have considered for this trend following system. So let me run this for you now and look at the accuracy. So I'm running this. So the indicator has been calculated now in Python, and now rule number one, that is when we have to go long, is calculated. Rule number two, short. Rule number three, rule number four. Now the overall points which we have gained is around 47,269 points in Bank Nifty. From the period, this is the config file. Basically this is the config file where I have passed the Bank Nifty 75 minutes chart. 75 minutes chart. The value of don't chain and the stop loss and all I have just kept it as blank because it's a trend following system. Like yeah, I have kept it blank intentionally, and now this is 4,769 points. Let me show the time period for what it has been calculated in the reports. Just give me a minute and we'll extract this. Yeah, got it. Let's go to the report. 1255. This is the latest one which we executed now. So if you see, this is from 2019 to it is almost till 2020 2023 2023 19 17. Okay, the data is from 17 18 19 20 21 22 27 years. So if you calculate it, so let me quickly calculate for you. So 47,000 points roughly. 47,000 points by 7. So 6,700 points, 6,725. So it has given us around 1,50,000 average every year on an investment of around 2 lakh rupees of Bank Nifty or if we consider the overall margin requirement without, we can calculate as 7 lakh rupees. So on an average, on futures, it has given us around 1.5 lakh rupees. So this is how the trend following system works. Now, what we can do, we can just calculate the statistics of this particular backtest report. So I have calculated this for you. So if you see, the winning accuracy is just 0.24%. That is around 24% winning accuracy. So we have we have watched the overall P&L value. So we are making money with 24% accuracy, which I believe most of the traders are doing this in trend following. So the winning trades were 228 trades, the losing trades were 710 trades. So if you are executing around 930 trades, out of which you will be only winning 228 trades. So like imagine the level of patience we need to keep to follow trend following system. So trend following requires a very 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 tough mindset, and yeah. So overall drawdown which a user has faced is 1,66,000. So the investment is always maintained with 3 times of the drawdown. So overall the investment should be 5 lakh rupees every year. On 5 lakh rupees you are able to gain around 1.5 lakh rupees, or deducting the transaction charges, slippage charges, considered as 1 lakh rupee. That is also 20% in a year, which is huge return according to me. Then we have consecutive losing trades as 23. Uh, Over here you can think, while following a trend following system for longer run, you will be getting 23 losing streaks, which is which will definitely affect someone's trading psychology. And the winning trades will be maximum 4. On every 4 winning trades you will be having a losing trade, and the drawdown recovery days will be also 29 days, which is very painful actually, if you see. And let's move again to the calculator and pass this 1.59 profit factor to a calculator to see what accuracy do we need. 1.59, 1.59. So risking 0.5% of capital. So if I plan to risk 0.5% of my capital on every trade, 0.5%, with a risk reward of 1 is to 1.6, I need 23.81% accuracy, which is exactly matching with the statistics which we have got, that is around 24% uh, on a single time frame. But we can increase it up to 47% if we include a double time frame. But still we are making money. Still we are making money every year consistently. So this is how a trend following system is uh, made live. Yeah. Uh, this was all about the back test. Uh, I think I have pretty much finished most of the concepts which we have planned to cover in this webinar. Uh, so I will be open to have some questions if anyone has some questions regarding this. You can post it in the chat. If someone wants to repeat me
Wonderful.
any of the part,
Yeah, sure. I
yeah, if
mean, I can see a lot of questions that has come up. Like, first of all, like, thanks so much. I mean, in a very short and uh, concentrated way, you have actually shown how to go about doing systematic trading. So thanks for the session.
thank you.
And
Thank you.
before we go into the Q&A, let's give you.
Your voice is breaking.
No, just give me a moment.
Yeah.
Right. So before we go into the Q&A, I mean, let's give Yatish a quick 2-3 minutes breather, and then we'll take up the questions. But before that, actually, let me, I mean, give a brief intro about like ourselves and what we have been doing, and also maybe if you add few more points related to algorithmic trading, particularly. I mean, a lot of myths are there in algorithmic trading, which I would also like to dispel a little bit, right? And then we'll go into the Q&A. Hope that is okay
Sure.
with all.
Sure.
Right. So as most of you already know, but still, I mean, just to give a very brief intro about ourselves. I mean, we are the Indian Institute of Quantitative Finance, and we specialize in education and training in the field of quantitative finance, financial engineering, risk management, quantitative algo trading, artificial intelligence, and machine learning. So we have been founded by pioneers in India in the field of financial risk management, financial engineering, investment banking, and as an educational institution, we focus primarily on promoting education and training in the field of financial engineering, quantitative finance, risk management, investment banking, algo trading, derivative products, and artificial intelligence and machine learning, and several other areas of modern finance. So, I mean, for people who want to make a career, I mean, in particularly in advanced areas of finance, right? So we have specially curated courses which actually are very deep and prepares you for this kind of field. So since today's webinar is in context of like trading, systematic trading and algorithmic trading, so I would first start with I mean, introducing our courses in algorithmic trading, right? Just allow me one moment, please. Yeah, sorry for that. So I would like to start by introducing our courses in algorithmic trading that we do, right? So we in algorithmic trading, we have a very comprehensive course called postgraduate program in algorithmic trading, which is like an 8 months course. And all of these courses that I'll be mentioning, these are all courses which you can do part-time along with your job or any other educational qualification or degree that you are pursuing, because these are conducted through online and live interactive sessions on the weekends. So it's the advantage is like, again, you get the best of both worlds. So I mean, you can attend the sessions live interactive. It's like you can interact with the faculties during the sessions, and then every session is recorded as well for future reference, right? So coming back to the course, this postgraduate program in algorithmic trading, over a period of 8 months, we would be teaching end-to-end about all aspects of algorithmic trading using different kinds of strategies, technical analysis, machine learning, and quant models, right? And then, I mean, we do have a shorter course on algorithmic trading called Certificate Program in Algorithmic Trading for people who don't want to go into too much of mathematics. So this is like a course which teaches you end-to-end about all aspects of algorithmic trading using technical analysis, right? Further, I mean, if somebody wants to go into quantitative analytics or financial engineering and risk management, so for them, we have a couple of courses. I mean, we have a course called Certificate Program in Quantitative Finance and Risk Management, a 6 months course, which deep dives into both theory and practical modeling for derivative valuation and risk management. And then we have a course called Certificate Program in Financial Engineering, right? So, which is a very, very comprehensive course, which where we go very deep into both theory and practical mathematical modeling for derivative valuation and risk management. These are courses particularly tailor-made for people who who are already working or want to go more deeper into the quant teams of international banks or the consulting firms or like the hedge funds and other financial institutions. And we also have a course called Machine Learning for Finance, right, which is an 8 months course where we teach machine learning in deep. But the difference between this machine learning course and the machine learning course, so many machine learning courses are available outside, is that this is like a machine learning course with machine learning is taught in absolute context of finance. So every example, every case study, every white paper, I mean, that we do and teach in this course is in context of finance, be it fintech or I mean derivative valuation, pricing, risk management, algorithmic trading. So applications of machine learning into different areas of finance, right? So these are few courses which I mean those who are interested in like again learning about these fields in deep, and particularly those who want to make a career, those who want to enter into this field, or if you're already into this field and you want to go more deeper, these are courses people have been doing over last almost 13-14 years that we have been conducting quant related courses, right? So now let me also bust a few myths about algo trading before we go into the Q&A, because a lot of questions generally actually are related to this kind of questions are there, right? So again, and a lot of questions we also keep on receiving for people who want to enter into the algorithmic trading, and a lot of them have an apprehension ki kaise hoga, I mean how we would go about it, right? I mean, we don't know coding sometimes people have a coding background, they do not know finance. So first let me tell you, like, again, one of the most common myth to start with is, like, again, people think that algo trading is all about high frequency trading. But like, let me tell you that the truth is algo trading can be ultra high frequency, medium frequency, low frequency, and ultra low frequency as well. So algo trading is not about only one kind of trading. As Yatish was mentioning, right? Whatever kind of systematic trading you want to do, if your algo logic, or rather if your algo has a specific logic which can be written down in terms of steps, systematic steps, right? So then they can be algos. It can be any frequency. Now another question that a lot of people ask is, a lot of people think that quant trading and algo trading is the same thing. Again, no. Algo trading, a lot of people think that algo trading always uses advanced quants, which is advanced mathematics. Not always the case. The truth is, algo trading can be done using any kind of strategies: technical analysis, fundamental analysis, quantitative analysis, machine learning, behavioral science. So you can be doing any kind of strategies, and you can build algo using any kind of strategies. So it not necessarily always has to be very advanced quant models. In fact, as Yatish was showing, a lot of the strategies that people do is using technical analysis, which is generally, though it uses statistics, it's not like quants. I mean, I'm not going into difference between technical analysis and quants at this point of time, but again, technical analysis is not quant. I mean, quant would mean like more advanced actual, more mathematical equations, which we do use in trading. But again, you don't need to always go into advanced mathematics to trade. Of course, I mean, more things that you know, more things you can apply, then definitely, I mean, you have more chances of making money. But again, that does not mean that you has to use advanced mathematical models, right? So just like a more elaborative example of, like, I mean, what kind of things you can do in an analysis can be done using any kind of strategies, right? So you can do using technical analysis, and then technical analysis, I mean, once you do the analysis, the signal generation can be manual or automated. If it is automated, of course, it will be through algos. Similarly, for fundamental analysis, you can do manual signal generation, automated signal generation. For quantitative analysis, also you can do manual signal generation and automated signal generation, right? But if you want to automate, then of course you have to learn algo-based trading, and you have to use algos, right? So these are various steps. I'm not going at this point. I mean, Yatish has already covered a lot of the steps. So I've been doing algo-based trading, but again, just wanted to add to that. And most importantly, let's also understand what are the benefits of doing algo-based trading. Again, Yatish has covered few of the things. First point he has already covered. I mean, algo trading, if you are doing systematic trading, if you are doing, then you cut out the human emotional elements of greed and fear, which is considered the worst enemies of traders, right? As Yatish was mentioning, if you follow a system, right, even with like a low hit ratio, also, I mean, if you carry on your trade as per your systems, then also you have like a huge winning formula, right? But when you are but again, the emotion comes to the play most of the time, and then again, you end up not following the system. But if you do it automatically or through systems, then this human emotional aspect is cut out, right? And of course, I mean, if you are doing through algos, you have the scope of developing better trading strategies, whatever method you use: technical analysis, fundamental analysis, quantitative analysis. Because when you do system-based trading or algo-based trading, these are objective, and then they're not whimsical or random. So when you once you follow a system and you have back tested that system, then you have a more better chance or better strategies, right? And then of course, algo trading increases your trading opportunities. Manual trading has like limitations. I mean, manually you can only probably scan a small part of the market, or like maybe analyze a small part of the market, right? And then if you are doing through algo the same logic, again you can do and into the entire market can be scanned. I mean, a lot more opportunities can come. If the execution is through algos, then you can take those opportunities as well. Manually, if you are executing, you can only execute limited orders, right? So that's definitely, I mean, opportunities increases when you do algo-based trading. Efficiency, again, I mean, if you're automating your process using algo-based trading, then you are reducing slippage, latency, market impact, and definitely you improve your performance, right? And of course, if you're doing algo trading, you can use strategies that otherwise are not possible manually. So you can build complex strategies, multi-leg strategies, and all like, and so manually, which you cannot do. Sometimes, of course, you want to do high frequency strategies and all, which you can normally cannot do manually. So these are things you can do using algos, right? Which otherwise is not possible, right? So that's what, of course, so these are all advantages of like doing algo trading. And again, because of like so many huge advantages that like algo-based trading provides, that's why like you will see that more and more people are actually moving to algo-based trading, right? So that's definitely I mean, there are a lot of advantages of trading using algos, which actually one can go into, right? So now, like if you wish to learn algo trading, and then we, as I mentioned, we do have courses to comprehensively teach you that. The main course is called a postgraduate program in algorithmic trading, PGPAT. So it's like a 8 months course split into two parts. The first part teaches you all aspects of algorithmic trading using technical analysis based models and trend following strategies, right? So the entire aspect in the first part is taught using that. And then the second part teaches algorithmic trading using more advanced strategies and models, machine learning based models, quantitative models, and all that, right? So, I mean, now if somebody does not want to go into too much of machine learning or quant model based strategies, they or maybe if they does not have the enough background in mathematics and all, they can start by doing the first part of the course. If you're doing only the first part of the course, the certificate that you get is called a certificate program in algorithmic trading. And if you're doing the entire course, then you get a certificate as postgraduate program in algorithmic trading. So again, we have things for everyone actually, right? So essentially, whether you are a beginner in terms of you are new to the market, or I mean, if you are from where you have a background in like trading and all, but you are new to coding, I mean, our courses are meant for all, right? So I mean, you can join the course as a novice trader, or without having any trading background, or you can join the course without having a programming background as well. Of course, that will require some preparatory things to be done that will guide you, but it can be done by like people even without having any background in both in terms of trading or programming for that matter, right? This is something anyway, as I was mentioning. I mean, if you're doing the first part, then you get a certificate program in algorithmic trading. If you're doing the entire course, and the certificate that you get is called a postgraduate program in algorithmic trading. So in summary, we have built this course with the aim of teaching algo trading to participants of all kinds of background. The only criterion is that participants should have the zeal to learn. For someone who is a little weak on the technical and mathematical side, they may start by doing only the first part of the course, as I was mentioning. And for those who are technically and mathematically sound, they can go the whole hog and learn all aspects of algorithmic trading in deep by doing the entire course. So whatever is your background, if you're someone who wants to learn algo trading and either work in international banks or hedge funds or prop desk, or if you wish to trade on your own or wish to set up your own trading desk, we offer you the right course to fulfill all your requirements in algorithmic trading, right? And how it works, IAQF has a strong placement support as well. So if somebody is looking for a career in algorithmic trading, even before you start the course, when we are discussing with you, we do a career counseling, and then only we decide that suggest the right course, the right approach. Industry experts will be there for your career mentorship. We have a dedicated placement support team. We have a strong network of industry association, and then we use all this connects to actually connect you to the right companies once you are fully ready. And we are happy to help you with your jobs. And of course, again, in the entire process, we do resume building and profile improvement as well. So we are there to support you in the entire journey. I mean, whether you want to become, want to work as a trader in a jobs setup, or you want to do your own trading, or like, I mean, you want to set up your own algo desk, and you want to cater to as a consultant, right? So now, like again, it has been a long journey we have had over a period of almost 14 years now, and we have been fortunate to have many industry people from the industry and students taking our courses and making their career in quant and algorithmic trading and all these areas. Some of them have shared their thoughts. I'm not going into deep into that, but again, you can, this is like to just for example, for you to see how you can utilize all these courses to make a better career, right? So if you're doing these courses, you can target jobs in hedge funds like Renaissance Technologies, DE Law, Citadel, Millennium Partners, investment banks like Goldman Sachs, Morgan Stanley, Deutsche Bank, commercial banks like JP Morgan, Citibank, Nomura, stock exchanges like NSE, NYSE, etc. You can go into consulting firms like EY, Deloitte, PwC, etc. And of course, you can go into prop desk like Tower Capital, Dolat Capital, to name a few, right? So, it's like a lot of opportunity be taken. And this is like a small list of organizations that we have worked with. Pretty much everybody in the quant and the risk space, be it the international banks or consulting firms. So this is like a small list, just like as an example list for you all. And yes, we have worked with educational institutes as well, because we are, a body which has been promoting education in advanced quant analytics, algo trading, and all these related areas in in India for almost like 14 years now, right? So we worked with in prestigious institute like IIT Bombay, BITS Pilani, NITI, to name a few. NITI is now, of course, IIM Mumbai. Anybody getting interested in any of our courses, they can visit our website, iiqf.org. You can call us on this number, 897-699-3622. And overall, you can email us at info@iiqf.org, right? So yeah, so now we'll go into the questions. Of course, anybody has been interested in discussing anything, they can call us, and we'll be happy to discuss one-on-one as well. But now, like, let's go back to the questions. So, Yatish, if you are ready, I'll be collating the questions, and then I'll be taking it up for you.
Sure. Yes.
Right. So the first question was from Avinab. So he has mentioned, is algo trading feasible for beginner traders? So I have, tried to answer my question in my brief presentation. But again, if you want to add anything on that.
Yeah, it is. It is definitely. As a beginner trader, you will be more like lean towards creating new strategies which you can backtest and create your belief on your strategy to follow it consistently in life.
Yes, absolutely. Absolutely. So, Abhinav, so I've already discussed that in detail. Like again, as a beginner, of course, everybody starts at some point of time. So beginning is absolutely fine as long as you are willing to learn. Either from our courses or like, some, of course, again, it's like you can learn yourself as well. Maybe it will take a little bit more time, but everybody is a beginner at some point of time, right? So nothing wrong being a beginner. If you have the zeal to learn, definitely, again, as a beginner, you can start learning and becoming an algo trader. Now, Srivatsava has asked, he's interested to know how a professional algo trading is done at institutions and individual is done in institutions and individual traders. Okay. I'm not sure if that question is clear. So Srivastava, if you can elaborate a little bit more, that will be helpful. Maybe we'll come back to that question later on. So Srivastava, we'll take that question. But again, if you are there, then again, kindly just like again elaborate a little bit more on what you mean by that. Actually, we'll take that question and come. Now coming to that. Next question is from Subham, and he mentions that I'm here to see the usage of algo metrics in daily trading setup. If you can explain for retail traders perspective, that would be great. So a lot of it you have already explained, Yatish. Anything you would like to add to answer this question?
So the basic metrics which one has to follow, like I already showed it to, like the drawdown and the recovery days, the winning percentage, losing streak, winning streak. Those are the pretty much metrics which you should consider for the system, day-to-day system.
Correct. All right. So going to the next question. All right, Adil, I mean, I hope you have posted your question later on. Adil has asked like how to post the question, and that I've already mentioned. You can post your question in the chat window, and I'll scroll down and see if you have posted your question. I'll take up your question definitely. All right. Next question is from Amar. He's asked like, I have been working as mainframe developer for 5 years now. I just want to ask that I can move to algo trading, and what obstacles will I face in going forward? And would I get a job in the same field?
Uh, to answer
Would you
this
like to
question,
answer?
if you have already worked as a developer, then the core concepts of programming will be clear for you,
Correct.
and you just need to like develop that skills of combining, or we can say learning how strategies are developed with respect to programming. So courses, I believe course such as PGPT will help you to shorten your learning curve, or else you can learn yourself also to do this.
Yeah, thanks so much. That's absolutely right, Yatish. So, I
Yeah.
mean, if you have a programming background, then of course, I mean, there's no doubt that your learning curve will be relatively easier compared to those who are new to programming, because at the end of the day, algo means a computer program. So if you're doing algo-based trading and if you know programming beforehand, then definitely the other aspects can be learned. And as Yatish mentioned, I mean, doing a course like PGPAT shortens the learning curve, but yeah, otherwise, a lot of things you can learn on your own as well. Okay, going to the next question is from Akash, and he mentions how to build a successful automated algo. So Akash, I believe, I mean, the lot of the steps actually Yatish has shown in during today's session. So again, that would give a lot of idea, and again, I mean, you can start with this knowledge and then of course further build on that. Okay, so now Dan has asked, why do we need WebSocket?
Okay. To answer this question, uh, for an example, if you're planning to develop multiple strategies options and you want an option chain is basically a tool where you have multiple strike prices, like the ATM plus 20 strike price about ATM minus 20 strike price below, and you want to get the data tick by tick data continuously in all of those strike prices. So in order to get that, the LTP API has some restrictions, like you can hit 10 requests per second through LTP. But in order to get that data synchronously in all 20, 30 strike prices, you need to have a WebSocket which doesn't have such limitations of hits. It should be able to get 20, 40, 50 strike prices data uh, in one go through the WebSocket. So this is the reason one should use WebSocket instead of like LTP API. Yeah.
Absolutely. I hope that answers your question, Dan. I mean, if you have a follow-up question, you can definitely put up. We will take it up. Uh, Krishna has mentioned, when we backtest a strategy, is it okay to eliminate a period like COVID when markets were very volatile, or should we test with and without COVID impact? Your thoughts on that, Yatish?
Like personally, I have backtested around 100 plus strategies in last 5 6 years for over a period. But majorly my strategies have worked in COVID period also. So it's an individual call to neglect it or to consider it. Or you can just reduce your position sizing, or ensure you have a drawdown controlling technique, which will make you to go through periods such as COVID.
Yeah, absolutely. Absolutely. But again, depending on like also on the what kind of strategy actually, right? And how much a long duration it is, I believe. But yeah, I mean, mostly like again, we should not be selective. I mean, the strategies should be robust enough to actually withstand all kinds of period ideally.
Yeah.
Right. So the next question is from Adil, and Adil has asked, is total profit the sum on only the winning trades, or is it the net profit for a particular duration?
The
And
statistics which I showed you was the sum of winning trades. The total loss was the sum of losing trades. You need to subtract it to get the actual profit.
correct. And he has a follow-up question actually. So he mentions that do you stack these strategy metrics on the overall collection of strategy modules or for individual strategies?
Individual strategies and then the combined system, both.
Absolutely. Right. All right. So the next question is from Srivatsava again. So basically, he has asked, can we get all these essential metrics from backtesting the strategy or from historical data?
This is not clear actually. The question is not clear. You
Uh, okay. Yeah, just like the question is, can we get all these essential metrics from backtesting the strategy or from historical data?
you need to pass the historical data into your function, and the function should consist of all the formulas which are required to calculate the statistics.
Right. Absolutely. I hope that answers your question, Srivatsava. I mean, if you have a follow-up question, please feel free to put up. We will take up. Okay, so Dan has asked, name the indicators again. I think the indicators that you were mentioning. First thing is like
Okay,
before you go into that, let me mention, Dan, the indicators are like there are thousands of indicators and
right,
patterns, right? So I mean, out of all this, you would be using only a set of indicators which suits you. All right. So each, I mean, that is something. It is like not like what Yatis has used or any other traders has
right,
used. That is
right.
these are the only things that has to be used, right? So these are just examples. And I mean, please feel free to use any indicator that suits you. It's good to learn all the indicators and then like again doing your own testing, back testing, and like what I mean, and according to your overall setup, what works best for you, right? So yes, in anyway, like Yatish, I mean, you can mention the indicators that you have used and like maybe put your thoughts on whatever I've said.
Sure, sure, sure. So basically, initial period of my learning, I was trapped into this uh, multiple indicators, which I used to backtest one indicator, then second, then third. Then finally, I realized that choosing your indicator doesn't matter that much. You have to develop a system which should have proper statistics and not the indicator, because indicators are derived from prices, and in all of the system you will be getting a long signal with all of the indicators, with the indicator today or with another indicator today or 2 days later on. But overall the system should give you the profit if you wisely like develop it using different indicators.
Absolutely,
Yeah,
absolutely, and as Dan, as Yatish has shown, right? I'm just like again mentioning that again. I'm repeating. I've mentioned earlier also, right? So it's like I mean, it's more important to follow a system, whatever indicators you are using, and then I mean, if you have you seen like from the example strategies also which Yatish has shown, even with like a very low hit ratio, there is like a significant overall profit that you can make as long as like the system overall works, right? So yeah, I mean, now going to the next question, and sorry, yeah, Dan, if you have any other follow-up questions, please feel to type in. But now going to the next question from Adil again. So he says that you said it's important to stick to your system, but in real world, is there never when you drop a system? If yes, then when do you change your strategy or drop a strategy? And the follow-up question is just combining his two questions. Are strategies developed for specific stocks or should work on any stock?
yeah, this is a good question actually. So it's an individual call. Basically, if you have a set of strategies in a trading system, then you can think of monitoring the statistics of individual strategy and changing the position sizing in all of those strategies. Instead of changing the complete system, you can maximize or minimize the position sizing in different strategies, or else you can use drawdown controlling techniques such as moving average of P&L, or like, yeah, moving average of P&L instead of completely stopping your system. Yeah, there are many techniques you will learn, like you will come to know. if you get deep into
Yeah,
this.
correct. That comes with that experience. I think,
Yeah.
Adil. I mean, there is not one set of rules that like everyone follows. I mean, there are different ways to actually keep on monitoring your strategy on system, and of course, I mean, you have to change your system in general also, because again, what works in one regime of market may not work in the other regime. So yes, there are a lot of indicators, lot of factors that are taken into account while
Yeah.
deciding which strategy is working and what
Yeah.
to replace.
Right. For an example, if I tell you, there are some strategies which need to be traded when VIX is above 15. There are some strategies which need to be traded when VIX is below 10. So you need to allocate like the percentage of capital into different system with respect to the VIX. So this is how one can think of diversifying.
Correct. Absolutely. All right. So next question is like, what are the some common optimizations that are done on strategies? Like, does optimization check for best stocks to apply strategy, parameter optimization, time frame optimization? So what are the kind of optimizations that are commonly done on strategies? And this is also from Adil actually.
So to answer your previous question that the strategy was specifically to that particular index. Yeah, definitely. All stocks have different behavior. The data points of all stocks are different, and the regime also changes if two stocks are of different, like they don't have correlation. In that case, you have to develop system with respect to that particular stock and optimize. Coming to your second question, optimize. You can optimize the time frame. You can optimize the parameter of indicator. Also, you can optimize entry exits. It depends what suits your psychology.
Correct. Absolutely. So going to the next question, which is from Vishwa. Okay, it's a very simple question, but again, you can just like give him some idea. He has asked how to calculate the margin required for a strategy.
For calculation of margin requirement, all of the brokers they have the REST APIs, which includes fund API and margin API straight away, where you need to pass your desired legs in that API, and in the response, it will give you the margin requirement for your individual leg or the complete basket of your legs in response. So it is pretty much simple.
Correct. Okay, so now I'm not sure which strategy that Kushal is mentioning. I mean, you discussed about two strategies, right? So he asked, how accurately does this strategy or algorithm work in a bearish or a consolidated market? So, I mean, I'm not sure. Again, that is important, but again, if you want to add
Yes.
anything to that.
No, again, as I told you, it's all about the analysis. Like in what markets you need to keep what position sizing in which strategies. Like out of 10 strategies, I need to increase my position sizing with respect to the VIX, and in which we need to like again, it's a dynamic thing. I cannot have a static answer for this.
Absolutely, absolutely. Right. So next question is from Sashi, and he has mentioned that if possible, can you show us WebSocket code for order, and do you use trailing stop loss for your strategy?
Um, yeah, I do use a trailing stop loss for strategies. This system consists of selling, buying, trend following, three of this, and three of the strategies have trailing stop loss. Like the WebSocket code, it depends which broker you're using, and all of the brokers have their sample WebSocket code in Python in their SDKs, which they are providing.
Yes, absolutely. And again, I mean, Sashi, I mean, this is like a very short session, but again, when we do our entire course, we would be taking you through the entire steps, and we would all show all these things in more detail.
Yes.
All right. So some of the other questions we have already answered. Like going to the next question. So Srivastava, to answer your question, his question is, I mean, in terms of the courses, does both part one, part two happen together or one after the other? Now, Srivastava, it's one after the other. So again, as I mentioned, these are like part one, part two is of the same course. PGPAT has two parts, so part one and part two. So first we complete the part one and then only we go into the part two, right? Of course, again, we can discuss this one-on-one. I mean, if you wish to discuss, I mean, you can call us or like we can also get in touch with you and discuss in detail. Okay, Subramanian sir has asked, I mean, any specific educational qualifications for enrolling? Yes, actually, I mean, we require you to be a graduate at the minimum, and generally graduates from commerce, finance, engineering, mathematics, statistics, economics, science with mathematics. So pretty much, all, I mean, you can, I mean, all graduates can join, apart from people from the arts background, and also people in their final year of graduation can also join, but they would be getting the certificate once they are graduate. And yeah, so if you have a follow-up question on that, Subramania, then you can put up in the chat window. We will take it up. Okay, the next question is. Okay, so it's the question from Parimal, right? So this question is how to incorporate strategies in trading platform.
I didn't got this. Like which trading platform
So
exactly?
what he is asking is, so how to incorporate strategies in trading platform. So what he means is basically, I mean, once somebody builds an algo, right? So how it goes to the trading platform. So he's basically asking about the integration part on that.
Yeah, in this case, you need to connect it with the desired broker through their APIs, and uh, and then you will be able to like all the orders that are executed to your piece of code will be reflected in the trading platform which you are using.
So Parimal, just to add to that, Yatish, so Parimal, what happens is when you have, there are a lot of brokers who have algo enabled platforms. So those brokers actually shares what are known as APIs. So APIs are interfaces, programming interfaces through which you connect to the trading system, right? So you write your code, your algo, and then through that API you connect to the trading system. Once you connect, then live data will be coming from the broker directly to your algo, and then basis your algo logic, the signals will be generated, and then you would be having your next set of algos, which are execution algos, through which actually you will be placing your orders again through the same system, through the API, right? So does that answer your question, Parimal? And again, if you have a follow-up question, please feel free to put up in the chat window. Okay, going to the next question. Srikant has asked, what are the strategy that will be trained in, and is Python coding is must? Would you like to answer that question first?
So the strategies that will be taught were like the trend following, like most of the which Nitish sir has shown in the PPT. And like even if you know any of the language, Python, C++, if the core concepts are clear, then it will be like you will be able to easily grasp the overall context which we have in the curriculum. So the programming language
Right.
will not matter. Yeah.
Yes, absolutely. So Srikant, just to add to that, I mean, it's not necessary that you will have to only do through Python. So, but the thing is, like, if you want to do algo trading yourself, then again you need to have understanding of at least one programming language. It can be Python, it can be C++ or any other language, right? So you definitely need to use at least one language. Why people use, I mean, why you hear about Python more is because to start with, Python is open source. It's relatively easy to learn compared to other languages. And then in the last few years, a lot of work has happened in Python, right? So there are a lot of pre-designed libraries which are there, which you can actually use, right? So there are a lot of advantages currently, particularly if you are starting out to start with Python, but it's not compulsory that you have to only do with Python. I mean, if you are good with any language, even you can use that. Okay, the next question is from Amit, but before going into that, now like again, we are already like almost 10 minutes past our time, so we would be taking up the next 3 to 4 questions. So hope that is fine, Yatish.
Yes. Okay.
All right. So next question is from Amit, and he has mentioned that since now it has been mandatory to use limit order instead of market order for entering and exiting trade. So in case there is a huge volatility, the stop loss might get jumped due to limit order. So how does algo trading overcome this issue?
In this case, you have to constantly fetch your order book, check the status of the order, and retry your orders to exit this with the updated price, which can be executed.
Yeah, exactly. And like again, this is where Algo actually is like very helpful. I mean, this is one of the real uses of like the Algo. I mean, if you are doing it manually, then there is always a chance of you missing the stop losses and all like it. But I mean, Algo would ensure that again it gets like executed. Right. So now, okay, the next question is from Sashi. He has a couple of questions. So first is a question, I'm not sure whether he has asked which is the best API for Indian market. So I mean, would you like to, or maybe you can give them idea about the various API that are available instead of like going into which is best or worst. And again, you can maybe also mention briefly about like the advantages, disadvantages.
Okay. Like if I tell you the different APIs which you can use, is like the first one is interactive brokers, which you can use. They have free WebSockets, free historical data, which you can use for indicator calculation in live markets. The next one is Zerodha. You can use Zerodha's open APIs. They have paid WebSockets. And then you have the top, like you can consider top three brokers like the Angel one and the uh, SMC and few more. So it should not matter to you, the API, if you are planning to go for algo trading.
Yeah, that's correct. So just to add to that, there are other APIs as well. To add actually, I mean, there are different kinds. I mean, there are APIs. First of all, Zerodha or like Angel One that you mentioned. There are many brokers which gives you the similar REST-based APIs, and they're all almost equally good. There are a lot of companies, Fires, there, Master Trust is there. There are many brokers which actually offers you
Right.
this kind of REST-based APIs. And then again, if you want to go into more complex algo building, then again you have group of APIs that are given by the Nest system, right? So there are Nest-based APIs as well. And then Symfony has their own set of APIs. So there are different kinds of APIs. Depends on your use actually. So it's not about good or bad or best. I mean, it depends on your use. Most of the REST-based APIs are quite stable, and then you can use it. But again, if you want to do more advanced trading, and there are other APIs as well, which you can go into.
Yes.
Right. So the next question is for Abhishek, who says that this question is there any program available without algo which could help me in landing into a finance field job? So this is like a very generic question, Abhishek. So finance is like a huge area. I mean, trading or even, algo trading, these are all small parts of finance. So, I mean, depends on what kind of field in finance that actually you want to make a career in. I mean, algo trading or trading is only for people who want to make a career as a trader. right? I mean, if you want to go into general finance, then you would have courses in general finance. You can start with maybe even an MBA finance. I mean, it can be even CA, CFA. So there are a lot of basic courses are there, right? If you want to go into uh, quant-based analytics or financial engineering or risk management, so then there are courses to enter into this kind of advanced analytical areas of finance. I mean, there are courses you can do on that. So depends on what kind of area or what kind of area in finance you want to enter into. Then depending on that, you would maybe select a program. If you wish to have a detailed discussion on this, I mean, you can call us, or if you want, we can also call you and again have a detailed discussion on, like, basis your background and also your interest, what kind of courses you need to do. So we can take that up. All right. Next question is okay. His name is not mentioned. It's mentioned as JR. He mentions that please mention position sizing method that you use. So what are the methods and position sizing that you use?
Uh, like it depends on the strategy, statistics, the winning ratio, the drawdown. If I want to maintain a higher position sizing in the strategy which has higher accuracy and lower drawdown, I would allocate some good percentage of my overall capital to that particular strategy. It completely depends on the combination of multiple strategies, their drawdowns, their winning accuracy. You need to set your position sizing with respect to overall statistics of the strategies. So there is no standard way of, like, if I tell you there is no standard way, you need to look into your system strategies, their statistics, and then decide what amount of what percentage of funds you want to allocate to that particular strategy.
Absolutely right. So okay, I mean, but still, again, would you want to mention, like, in one or two methods, since he has asked about the methods?
If I tell you the methods, I would like to get the moving averages of all of my strategy P&L, and whenever I get the strategy P&L moving average below X moving average, I would like to reduce my position sizing for particularly that strategy, because in my basket that strategy is not performing well. So I will reduce my
Right.
position sizing by 20% on every 2% of drawdown. And once my P&L of that particular strategy gets above X moving average, I will keep on uh, scaling my positions till I hit a new uh, till I hit a new drawdown below my moving average. So this is little in, like, I need to tell you in depth.
No, no, I mean, only to, I mean, this is the, of course, you don't need to go into the
Yeah,
proprietary
exactly.
part of things. No, I mean, you just like a general idea about the methods. Like, I think, Jaya, that answers your question. So if you have any
Yeah.
follow up on that, then you can put up. But yeah, so then going to the next question is from Chandrasekhar, and he mentions that I have a few strategies which I would like to backtest, but now that expiries has changed recently, would the results differ than the reality that might come across in front test?
Uh, Again, I believe in building the systems which are universal, which will work irrespective of expiry change.
Okay, okay, no, absolutely, but okay, sure. So I hope that answers your question, Chandrasekhar. And again, if you have a follow-up questions, please put up. I mean, we would be taking the next 2-3 questions before we wrap up. Okay, so the next question is from Banla. And his question is okay, so the question is more regarding the course. All right. So his question is, the course will be teaching only by live sessions. So possible to recovery some video for all those who are not good in English. Okay. So Banla, the current mode of this the course is, like, the language that we will be using is English actually, right? But yes, recordings will be provided, and I mean, if you are not that good with English, maybe like going through the recordings a few times would help. But the medium of instruction in the course currently is in English. Okay, Rajesh wants to see the course details. Sure, Rajesh, we would share the course details by email, and then we would also give you a call to discuss any queries or questions you have if you want to discuss in detail. So we would give you a call. All right. Thanks, Srivastava, for your kind words. So Srivastava has mentioned that it's a great session to get started with the course. Thanks, Srivastava.
Thank you.
Next question is from Satish, and he says, I'm a CAD designer working in an intralogistics company, but I'm a non-graduate. Would I be able to enroll? So Satish, as I mentioned earlier, again, normally graduation is the minimum requirement, but depending on your overall background, we can have a specific discussion on this, and then we can see if you have enough background to make an exception. We can discuss this separately. Okay, the next question is again a very basic question, but maybe again this maybe a lot of people who are starting out may have this question. So can we automated buying and selling once signal is generated mean everything automated, or is there any manual intervention on trading platform?
So basically, there are two types of algos which you can build. The first one is fully automated algo, where you don't need any manual intervention, where you just need to generate the tokens every day by login API. And the another one
Correct.
is semi-automated, where as you get the signal, you can develop a one-click mechanism where you want to accept the signal, analyzing few other factors, looking at the chart, or you want
Correct.
to straight away reject the signal. So these are two aspects.
Correct.
Oh.
Yes, absolutely, absolutely. So I mean, there is no one set rule, Parimal. I mean, whether you want to make it totally, as Yatish mentioned, you can make it a total fully automated algo system, or you can actually make it like a system with manual intervention as well, one touch or other systems, right? So it
Right.
depends on
If I want to tell you more, like in PGPT, you will be able to also develop your own scanner. For example, if I have a trend following system which I want to run on 100 stocks, and manually it is not possible for me to monitor 100 stocks, but I want to execute it on one click. And in this case, you can develop a algo which will scan 100 stocks and give you a pop-up that these are the stocks which are matching your criteria, and then execute it. So this is also possible.
Yeah, absolutely. Absolutely. It is up to you actually how you want to design the system, Parimal. So you have all these options. Right. So this is like the last question we would be taking. Again, most of the other questions we have already discussed. So Sashi, regarding your question, also again, we have already discussed that. But again, we will call you and discuss more on the job market and for a developer in this field, which I've already mentioned in my earlier slides. But anyway, the last question actually for the day is like from Thilak, and he mentions that can R be used for coding? It is also an open source. Though we have answered this question, just maybe adding two cents actually on this.
Yeah, you can. R is used for research and visualization, and you can use it for automation. Yeah.
Like to add to it, as I said, I mean, you can do trading using any language that you are comfortable with, right? So yes, you can do using R as well, but since Python is used more, so essentially the lot of the APIs and all, they support Python more, but that does not mean you cannot do using R. You can do using R as well. right? So I think with that like since we have answered about most of the questions, for the let's call it a day, right? Once again, thank you so much everyone for taking your time out and joining this session on a weekend. It's the we would keep having this kind of sessions as a part of our deep dives with IIQ experts webinar series. So keep following us, keep track of us in our website, in our social media pages. You'll also receive intimations over email for the different sessions that we keep on conducting. So please attend the future sessions as well. See you in the next sessions. And thanks once again. Thank you so much, Yatish. It was
Thank you.
like a very insightful session. And thanks so much for joining.
Yeah, sure. Thank you.